Today I'll kick things off by looking at stock market performance yesterday and overnight. Overall, equity markets were positive. Here in the UK, the FTSE 100 was up 0.6% and the FTSE 250 was up 0.2%. Over in the US, stock market returns were more muted. The S&P 500 was up 0.2%, whilst the Nasdaq closed slightly down 0.1%. Over in Europe was also very positive, up 0.5%, and even stronger overnight was Japan, up 0.7%. Good returns from UK equities. After a weaker day last Friday, you saw house builders and energy sector doing very well, helping to push the FTSE 100 higher. We saw the likes of Shell and BP outperforming, with power prices increasing noticeably across Europe. Royal Mail also performed very well after a report over the weekend discussed a deal with Amazon over the click and collect parcel service. For Europe, it was very much a similar story in terms of positive returns, particularly coming from the likes of oil and gas, while autos, banks were positive contributors. The pickup in energy prices has been noticeable. Natural gas prices are trading at a record levels for this time of year, trading at about 5 times their level of 2 years ago. Shortages are mounting as gas providers across Europe have been unable to fill storage containers during the summer. In the UK, the day-ahead power prices hit £540 per megawatt hour on Monday, the highest since 2008 according to the Financial Times. While supply is being curbed, you've seen a pickup in demand for energy after the easing of coronavirus lockdown restrictions. And to add to the issues, you've seen a lack of wind energy being generated in the North Sea. In the US, we saw value outperforming growth. Again, energy was the winner of the day. Nothing specific behind the bounce in equities in general, though it fits within the long-standing resilience of buy the dip mantra. On the economic data front, Monday was exceptionally quiet. Going to be a lot more busier for the week ahead. Grabbing the headlines was just the next US fiscal stimulus package, $3.5 trillion headline figure, but this has been discussed as having to come in significantly lower in order to get approval. So we heard from the Democratic Senator Joe Manchin, who said he could only support the package if it was coming in at $1.5 trillion, and only if the US maintains a globally competitive tax code. In the bond markets, very, very quiet, not too unexpected given the lack of economic data. Here in the UK, the 10-year government bond yield was flat over the day, now at 1.65%, and similarly in the US 10-year government bond was flat over the day, trading at 1.33%. Commodities, stronger day for oil Brent crude, not surprising given our discussions on energy, up 1.5%, so Brent crude is now trading at $74 per barrel. Gold was slightly positive, up 0.1%. In currency markets, the pound was slightly stronger against the dollar, but flat against the euro. So against the dollar, it was up 0.4%, trading at just short of 1.39. As George mentioned yesterday, today will be all about the US inflation numbers. The year-on-year headline reading will grab the headlines, but for us, it'll be looking at that month-on-month change and the underlying details within the inflation report. 5.3% is expected year on year. We got 5.4% last year. The data is really important because the Federal Reserve has the mandate to maintain price stability and maximise employment. The Fed has been very clear in recent months that the high levels of inflation that we're seeing at the minute will not be persistent. And as the economy normalizes, price increases will settle down. So that thesis will be tested and today and see how things are evolving. Also, we'll be looking out for the US and UK wages. Wages fill a very important component of the overall inflation basket, and it's more of the stickier component. So we'll be keeping a close eye out on that today. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.